Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/The Smattering, to get access to the 10 best stocks to buy right now. Airbnb just reported earnings recently, and the stock's down pretty bad after the report. But overall, there were some things in the results that are probably a lot better than the market's treating them right now. I'm Jason Hall. This is The Smattering, and I'm here with Jeff Santora, and we're going to take a closer look at what's going on with Airbnb after earnings. Hey, Jeff.
Hey, Jason. I'm excited for this one. This is a company that I own, that I have a lot of conviction in, so I'm really excited to dive into the earnings report here. Before we do, I want to remind everyone who's watching, if you're enjoying the videos, please hit the subscribe button. It helps other people find the show. And we also have a podcast called The Smattering that you can get on any podcast app, so please check that out as well. All right, Jason, so let's dig in here. Market didn't like it, but we did. Where do you want to start?
So we'll start, Jeff, we'll start right here with the things the company leads with in their earnings presentation, the things that they say are kind of key performance metrics. Nights and experiences booked, they always lead with this. 25% year-over-year growth, 99.7 million nights and experiences. They say driven by strength in all regions, right? That's a positive. And then gross booking value. So the total dollar value of all of the bookings on its platform, all the revenue that transitions across to the property owners, not the revenues that the company collects. So again, that's up 31% year over year. You adjust out for foreign exchange. This is becoming an increasingly international business. That was up 40%. So you look at that versus that 25% growth in nights and experiences. That means that premium costs or premium properties are getting good costs. People are booking longer. That's a real positive, I think. And again, you look at revenue. So this is the portion of that GBV that Airbnb actually gets, up 29%. Again, adjusting for foreign exchange, up 36%. That's a pretty positive number. Net income also up 46%. Jeff, it looks to me like, at least from what the company did over the past 3 months, pretty solid results, right?
Yeah, and the big number here on this slide that I think is important is that bottom one, which is net income for a company that really has made a turn towards profitability over the last several quarters. And you can see here, this is the most profitable quarter ever on the bottom line with the $1.2 billion in net income.
Let's move on to the next slide here, Jeff. I'll let you lead on this one.
So this is also straight up from the investor presentation, and these are also metrics that the company reports every quarter. So nights and experience booked 25%. We talked about that, but cross-border and returning to cities is another metric. So I thought it was interesting that they saw their cross-border nights booked increase 58%. So that's another strong sign. One thing that I think is
somebody in one area that's booking a stay somewhere that's in a different country, right? That's the key.
Yeah, exactly. Now, the next one, they've been touting their longer stays for the last several quarters. And it was interesting here that all they said was that it remained stable from a year ago, and that the longer stays, which they define as anything over
it's 4 weeks, right? 28 days.
28 days, I believe, stayed steady at 20%. So for the last couple quarters that had been growing, now it's steady. So I think that's something just to keep an eye on. But overall, these business highlights just kind of make clear the strength of the business.
All right, up next here, we've got, again, quarterly revenue. Looking at year-over-year growth, revenue was up 29%. That is, Jeff, that was a big deceleration from what we saw in the year-ago period. But let's be realistic. The year-ago period, the third quarter of 2021, third quarter of 2020, there were places in the U.S. and around the world, Airbnb wasn't even allowed to operate, right?
Right. And this is why I wanted to put this slide in here to show the year-over-year growth from a year ago, because that 29% is even more impressive when you think of it as being on top of 67% from the year before.
Yeah, and then adding on top of that, revenue growth did decelerate, but earnings growth was substantially higher. So you get operating leverage. That's one of the beauties of a platform model like this, where they have relatively low fixed costs. And at a certain point, every incremental dollar of revenue is worth a higher amount of profit margin on the bottom line, right?
Right, exactly.
All right, let's move on to cash flow, Jeff.
So this is another area where it's really positive and positive improvements quarter over quarter as you watch the results come out. So operating cash flow or cash provided by operating activities, you can see that was a big increase from the year ago quarter. And same thing for free cash flow, right? So not only has revenue growth and Nights and Experiences has been growing steadily for many quarters. More recently, we've seen the bottom line improve, and we're also seeing the cash generation improve. Those are all really good metrics for the business.
Things that are jumping out to me, again, $3.3 billion in free cash flow over the past 4 quarters, acceleration of that, $966 million in operating cash. The vast majority of that going to free cash generation. That kind of free cash generation, Jeff, is absolutely impressive for the business. Now, the one thing that we didn't have a slide for, I think this is the thing that probably affected the stock the most, and that's guidance, right? The expectation is we're going to continue to see some deceleration of growth. Not a big surprise, but I think there's a couple things I'd like to hear you mention that the company talked about, that their CEO talked about on the earnings call. If we do see a recessionary environment, there could be some positives that happen that could help drive this business over the longer term, right?
Yeah, it's important to remember that it's a two-sided business, right? There's the people who go to Airbnb to find a place to stay when they want to travel, but then there's also the hosts. And we talk a lot about Nights and Experiences booked and all of these numbers, and I think a lot of people think of that through the lens of the people traveling. But one thing that the CEO pointed out on the earnings call was if we do see a recession, there's a chance that they see growth in the hosts on the site as people might be turning their properties into Airbnbs to make a little more income. So that's an interesting dynamic that could result in the company being a little bit more recession resistant should we hit a financial downturn in the economy.
I want to get the last word in here, Jeff, just because I think this is really important to talk about because of where this business is right now. It started to get really more attractive on a valuation metric. Again, price to sales isn't necessarily a great metric, but again, because this is a platform business that should be high margin, 8x sales, if we look at that compared to its historical valuation, is not too terrible. And if you look at price to free cash flow, 38x free cash flow, starting to get juicy. We might see some weakness in the near term, but over the long term, I think this might be a really attractive entry point for the stock.